let's shift focus and let's bring on board the management of Thyrocare to talk to us on the show. And we have Mr. Rahul Guha, who is the MD and CEO of Thyrocare Technology, joining us on the show. Very good afternoon to you, Rahul. Thank you so much for joining us on ET now. And firstly, let me talk about straightforward. Let me actually jump through the quarters and ask you about FY24. If you have any sort of a guidance that you slated for the PAT as well as margin when it comes for Thyrocare. We will talk about the quarter gone by as well in depth. How has it been?
Thanks so much for having me. The quarter has actually gone well. As I shared, our franchisee business is doing very well. We grew at 16% year on year. We had a bit of a muted performance in our partnerships business, largely because some of our key customers in the health tech space actually degrew in this quarter. But overall, we've been quite happy to see the momentum in our franchise business. And should that continue to the end of the year, I think we should end at about 12%, year-on-year growth for the financial year, and while maintaining our EBITDA margins at the similar level of quarter one. So that's kind of where we're thinking we'll land.
Okay, also I want to understand the growth, that we are expecting to see in our franchisee business. How is the contribution that you see coming in from here? What is the expectation that you have going forward?
So our franchisee business, as I've always shared the last time also, is largely tier 2 and beyond, where the competitive scenario is less, and we have been focused on expanding our network quite substantially. Almost every month we add 100 plus franchisees in our network, and that momentum has continued. And I think that execution has really resulted into the growth that you see year on year in our franchise.
Right, Rahul. Let me dwell in further and ask you about what sort of growth plans you have in terms of expansion. Have you planned any expansion plans, or also if you all have, then how are you planning to fund it?
So one is, of course, our penetration further into India, which does not require significant capital. We already have 30 labs across the country. In fact, if you drop a pin anywhere in India, there will be a Thyrocare lab within 200 kilometers. So I think on that side, it's really more about adding franchisees and so on, which is not a capital intensive process. Our partnerships business is coming along well. We will partner, of course, with the government as well to participate in many of the health tenders that have been upcoming in the next couple of quarters, and we've been bidding quite aggressively. I think most of our capital allocation for the next year is going to fund our international expansion. As I highlighted the last time, Africa is one of the areas that we have narrowed down to pursue our Africa international strategy. Our first groundbreaking will happen in Tanzania. We should be operational in Tanzania by the end of this year. And then the second geography that we have identified for our international expansion is the Middle East. And that's something we're working on this.
Right, and also, just want to understand, you were talking about this international expansion. So how is that going to be funded as well then?
Actually, we have sufficient internal accruals. We generate a significant amount of cash every quarter. We see no reason to leverage to fund the international expansion. So we'll use our internal accruals.
All right, then Rahul, we leave it there. Thank you so much for joining us on ET now to talk about the way forward coming in for Thyrocare, also shedding some light on where you plan to expand, or also talking about your franchisee business. That's Rahul Guha, who's the MD and CEO of Thyrocare Technologies.